All right, the market's moving, but let's cut through the noise. What's really driving the action today? We're going to break down the big battlegrounds, the areas with huge momentum versus the ones hitting a brick wall. Let's get right into it.
So, how do we make sense of all this? Well, we're going to look at it in three parts. First up, where's the clear strength? Then, where's the pressure building? And finally, we'll get into the tricky stuff, the mixed signals, where it's not so black and white. That's where it gets fun.
Okay, so let's start with the bright spots. Where's the momentum? Honestly, it's pretty clear. All eyes are on the massive, and I mean massive, build-out happening in AI.
There is just an incredible amount of cash being poured into artificial intelligence right now, and that's creating this powerful wave that's lifting the whole tech sector. We're not talking about hype here. This is real, serious money going into building the future of computing.
I mean, look at this number, $5 billion. And get this, that's just one new investment from one company, Amazon's AWS, for new data centers in South Korea. It's just a perfect little snapshot that shows you just how huge and how global this whole AI boom really is.
So you might be asking, where does all that cash end up? Well, it ripples through the entire supply chain. You've got software companies like Adobe who are putting AI right into their tools. Then there's the hardware. All that spending creates a ton of demand for chips from places like Intel. And of course, you got to store all that data somewhere, right? So that's a huge boost for companies like Seagate.
But hey, it's not just about tech. Let's shift gears a bit. Over in Europe, we're seeing some surprising strength from a totally different area, the banks. They're putting up some really impressive numbers. Yeah, check this out. Some of the big European banks are just knocking it out of the park, totally beating what everyone expected. You've got UBS seeing this huge jump, mostly thanks to fees from their big money clients. Deutsche Bank's investment banking division also came in stronger than anticipated. And this isn't just a fluke, It really suggests there's a pretty healthy pulse in the European financial system at the moment.
Okay, but it's not all sunshine and rainbows this morning. Not even close. There's a totally different story playing out, a much tougher one, over in the industrials, specifically with European car makers.
And this right here is what makes the market so fascinating, isn't it? You have this incredible split. On one hand, financials are flying high. But at the exact same time, automakers are just hitting a wall. They are facing what you could call a perfect storm of problems.
Just look at this number. It's staggering. A drop of 70%. That's the fall in Mercedes-Benz's operating profit for Q3. 70. I mean, that's not just a bad quarter. That is a massive, blinking red flag for the entire auto industry around the world.
And when we talk about headwinds, these aren't just buzzwords. For the auto companies, this stuff is real. We're talking tariffs that hit the bottom line, massive costs for restructuring and layoffs, and, well, people just aren't buying as many cars. You add all that up, and it leads directly to that huge profit crunch we just saw.
All right, so we've seen the good and the bad. Now let's get into the messy part of the market, the mixed signals. These are the spots where good news and bad news are all tangled up, making it really tough to figure out what's actually going on.
The travel industry is a perfect example of this paradox. We're seeing a case where companies are putting up good numbers, saying good things about the future, but it's still not enough for a market that seems to be on edge. Okay, let's take a look at Royal Caribbean. At first glance, this looks amazing, right? They beat on earnings, they beat on net income, they even told everyone that the future looks brighter than they thought. But, and this is a big but, they missed just slightly on revenue, and that tiny miss was enough to tank the stock. It just goes to show you how jumpy investors are right now. Any little imperfection gets punished.
And it's not just travel feeling this nervousness. We're seeing little warning signs pop up in other places too. Starbucks mentioned that the consumer might be getting a little weaker. Over in energy, Equinor's profits are coming down from their highs. But then you see a little bright spot, like Roche over in healthcare getting a big approval. So yeah, it's a real mixed bag out there.
So, we've got all these different stories pulling the market in different directions. What does this actually mean for you today? Let's boil it all down into a simple, actionable checklist of things you should be watching.
All right, here are 5 key things to keep on your radar today. Number 1, for the banks, listen to what they're saying about future deals. 2, for AI, keep an eye on whether those big orders are still coming in. 3, that Starbucks report, use it as a quick check on consumer health. 4, in energy, are they cutting dividends? Watch that closely. And 5, for the car companies, forget sales numbers for a second. It is all about their profit margins. That's the real story.
So let's put it all together in a simple way.
Think of it like a traffic light. We've got a definite green light for European banks and that whole AI supply chain. Big red flags, though, for European autos and for energy profits. And then you have those yellow caution lights flashing for areas like travel and some software names.
And that really sets up the big tug-of-war for today. On one side, you have this incredibly powerful AI boom. On the other, you have a serious slowdown in a huge sector like autos. So the big question as you start your day is, which of these two powerful forces is going to win out? Which one will dictate where we go from here? That's your morning flash. Good luck today.